Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update podcast. I'm Craig Jeffery, your host for today's episode, titled How T-Bill Management Automation Became Possible. I'm here with Stephan from Jiko. Stephan, welcome to the podcast.
Thank you, Craig. Thanks for having me. It's a pleasure to be here.
Yeah, I wanted to start, if we're talking about T-bill management and this whole flow about how automation became possible, a little bit of history is in order. So maybe you could start by describing, why risk management broadly matters for how we manage our short-term liquidity or short-term, cash investments.
Sure. Well, risk management doesn't matter until it matters. Anyone who's been around 2008 or we even had the pleasure of dealing with Silicon Valley Bank in 2023 or First Republic knows what I'm talking about. Liquidity is there until it isn't. And when it isn't, it really isn't there. And it's sometimes existential for the clients. So whether it's 1929 or now, there's a need to be prepared for the shock. We never know when the shocks can come. Maybe there isn't a shock for another 20 years, 30 years, and that's what we all hope for. But it doesn't hurt. On the contrary, it's part of the job to be fully ready. So automation is part of that. There's been lots of progress in the field. It used to be that money market funds was the key invention years ago that made off-balance sheet cash storage possible away from just having deposits at a bank. That was a revolution. Now we're at a stage where you can go one level deeper beyond what the funds are holding, directly hold securities. But the need is now more than ever. The system keeps getting increasingly complex, and you just never know where things are going to hit when they hit.
That's some excellent framing, and I liked your quote. Risk management doesn't matter until it matters, just like insurance doesn't matter until it matters, right? You have to cover the issue, And so, if our focus is on T-bill on the cash side, maybe you could give a primer. What are T-bills? Who's buying and using those? Maybe just talk through that briefly.
So let's talk about a dollar economy first, right? So there's gold, there's Bitcoin, all sorts of things. But when you're thinking within the dollar world, or let's say you were in Japan thinking about the Japan world, this story is similar. But if you go to the source of money and you're in that economy and you need to have liquidity on hand, then the question is, what are you holding, and where does that leak? What choices do you have? Typically, people think of cash, but cash is not. You may have a few dollars in your pocket, but most of the cash is not physical. It's ledger entries on bank's balance sheet. Every deposit at a bank is a liability on the bank's balance sheet. It's actually you lending money, giving credit to the bank to do stuff with your cash. And underpinning all this, really, if you peel off the layers, the banks, the Fed, you go back to the source, most of the liquidity is actually coming from the U.S. government, the U.S. Treasury, which used to mint coins, and now it's T-bills, short-term Treasury bills, very short-term borrowings from the government. Bills are anything that's been between 1 month to 1 year. There's zero coupon securities. They accrue the rate kind of in real time. You hold it now, it will be worth 100 in a month if it's a 1 month security. And your counterparty is the U.S. government. The government issues many of them. The prerogative the government has is to print money when it needs to, so it can always pay its debt. So they're considered relatively risk-free. I'm going to put this under quote. There's always risk in everything you do, but of all the things you can do, this is one of the safest instruments. Historically, though, they've been mostly held by banks, broker-dealers, financial institutions to be their own cushion of liquidity. And they trade. There's a very deep market for them. You can buy and sell them at scale. If you're a bank, if you're a broker, in between, they're much harder to access. And we can talk about the access. Just to answer your question, though, they're short-term government securities that are very safe. They have very short maturity. They trade deeply in the market, and they're underpinning pretty much all the liquidity in the financial system. When banks send each other money, there's T-bills being repoed behind. When you buy a money market fund, the fund holds T-bills underneath and repos against banks, which are backed by Treasury bills. So if you think about what happens when there's a wire going out somewhere, there's probably a T-bill involved in that conversation today.
Yeah, excellent. Thanks for the That was a primer, maybe even getting into the 101, which was great. Stephan, I'd love for you to do a quick introduction of Jiko, the short intro of Jiko, and then talk just briefly about your history, and then what do you do at Jiko?
Yes, thank you for asking. Jiko, first I'll give you the reason for the name. The name means self in Japanese, your inner self. When we're incorporating, we were looking for something that really represented this idea that maybe you, the person, you, the corporate, could actually go back to the source and hold directly the fundamental units of cash, which we think is really in our world right now, the T-bills. And I started the company in 2016. We are a bank. We're a national broker-dealer. We're regulated by the Federal Reserve. I did that after years at Goldman Sachs. I started my career, ironically, in 2007 with a math degree. So my first real experience in finance was 2008. Longer conversation, what I witnessed there, people probably remember all the failures and the madness, the internal rushes within the big banks to try to free up liquidity and find T-bills or whatever we could to try to make the repo calls on Monday morning go through. And so I come with that experience. I was in equity, a lot of electronic trading, and in 2016, a few of us decided to try to build a bank that was designed to not fail, or at least be far less likely to fail than anything else, and really bring everyone a direct treasury bill experience.
So your formative years were during great turmoil. It is funny not funny, but it's odd how quickly people forget. They start building back on the floodplains. You remember since you mentioned Jiko and the Japanese connection, it's like people built down below those rocks that said, don't build below this level, right? You forget, even if whether it's hundreds of years or every 5 years, we're like, well, it hasn't happened in a while. Thanks for that background and the derivation of the name of the company. The next section I'd like to ask you about, Stephan, is key developments and the background for automation of T-bill management. And I think it might be useful to talk about what doesn't work so well, right? It's like T-bills might be great instruments, but there's a lot of friction, or there has been a lot of friction in how T-bills are managed. But maybe you could talk about the key developments and background that support the type of automation that exists. We've seen automation change so many areas, and this is another one.
Yes, it's a long evolution of the markets. Historically, T-bills were first paper instruments, and then just a dormant instrument that mostly banks trade with each other. And so if you wanted, as a person or as a corporate, if you actually really want it because you understand that you're going to face directly the U.S. government with no wrappers in between, you don't have much of a choice. But actually, you have two choices. You had to have a brokerage account somewhere, and you call a broker. So now you're doing a securities transaction. You're getting a quote on a security with a live price. You have to understand bid ask. You have to know which security you're looking for, understanding the QSIP. You'll get a confirm. You want to make sure that you get the right price. You have to watch all that. And in a few weeks, it's going to expire, and now you'll have cash, and you'll have to buy the next one. So operationally, it's involved. It's actually sophisticated, and it usually comes with something called a brokerage account that encourages you to do other things, which are probably a lot more risky than just a treasury bill. And so for treasurers, it's been historically quite a headache to try to implement any strategy holding T-bills because of these complicated workflows. The only other alternative is to face the U.S. government directly on their website at treasurydirect.gov. If you do that, you can indeed buy T-bills there, but then you can't just liquidate them. You have to hold them for a certain period. So you're not getting the immediate access that you actually need as a treasurer, where at times of emergency, you can actually liquidate your T-bills. I mean, we may want to talk about this a little bit, how come they're so liquid. What's happened to the market and what we've brought, amongst others, especially because of our equity background, we're used to electronic trading. And it's quite marvelous if you look at the equity market, the level of automation that's been brought there. You can have now very general retail market accessing fractional shares at almost no cost through platforms like Robinhood and Public and Fidelity and Schwab, obviously, as well. When you think about it, in the 80s, stock trading was also call your broker, get a quote. So that market's gone super electronic. There's automated order flow. If you read Flash Boys, you know what I'm talking about. And none of that has, the good and the bad, has actually come to the bond market yet. And there's two reasons for that. The bond market is complicated. There's many securities. Every issuer has more than one bond. So it's not exactly like stock. We have one stock for Microsoft. You can have many bonds. But for T-bills, there's not that many of them. It's actually a market that's very stable. The T-bills barely move. So what we've pioneered at Jiko is a fully automated trading desk that operates like an equity desk. Mixed market, very tight market, 24/7, allowing clients to just operate without having to talk to anyone. But to answer your question fully, what you need is a mix of a bank, a brokerage, brand new technology, and the know-how of trading that comes with the fact that a T-bill is a security.
Awesome. So the workflow, the knowledge, the tech, and I think that's a good story too, because there's so many things that we learn from other areas. It's like you were mentioning equity trading. It's like there's efficiencies here. How can that be applied in another area? What needs to differ and change? That was a great example. And as you started talking about that, what are some of the key aspects of automation for T-bill management? I mean, that's something Jiko does, but this is an approach to making it better. I know there's some, becoming more efficient means you either automate steps or you eliminate steps entirely. And there's, operational things like you talked about, accounts. Maybe you could talk through some of the major aspects of T-bill management.
It helps visualize a particular example. We could take the example of someone swiping a card and selling T-bills against it. That's the retail version of our product. Or let's take something that may be much more applicable to treasurers. Let's say you're going through a large acquisition. You just earmarked money weeks ago. The deal's about to go through. It's Friday night, 5 p.m. Your lawyers are not done, and now you're bleeding into the weekend. And let's say it's 3 p.m. on a Saturday. The lawyers are finally done, ready to transact. Of course, the wire rooms are closed. Normally, you couldn't transact. But here, let's say you have T-bills, and both sides have the building blocks of what we call a Jiko pocket, which is really nothing new. Our core product is a bank account attached to a brokerage account with all the automation that you can imagine around this for trading, payment processing, and the discretionary logic to say, I will liquidate or I will decide on behalf of my customer which T-bill to sell. Because typically you don't have one T-bill, you have a bunch because they're all ultra short term, but some money came a month ago, some money came 2 days ago, and so you've bought different security. What the ingredients you need are a bank account, a brokerage account, some automated investment decision, some payment processing, and some trading processing. If you put all that together, you're able to do in milliseconds what normally people do by hand, right? You call your broker, you liquidate your T-bills, takes a day, you get the cash in the brokerage account. Now you instruct the wire to your bank, you move it over. It takes another day, typically ACH is longer. Now you have it in your bank account, now you can pay. Well, we've made all that happen in milliseconds because all the ingredients are integrated stably on a modern infrastructure. So now you're able to say, send 1.5 billion to close our M&A deal at 3 p.m. on a Saturday afternoon. When you do that, in real time, everything I just described happened. Your algorithm wakes up, your little discretionary logic that has decision power decides to sell T-bills for you, frees up cash. Cash is created on the bank's ledger, cash is transferred, and the receiving party receives cash. Milliseconds later, the reverse kicks in on the other side, all the automation saying, we just got the cash transactions done. We don't want cash, we want T-bills. Let's purchase T-bills from Jiko's inventory. And basically the whole thing takes about a second and a half. It's not instant because there's a lot of controls running against it. But you just settle an M&A transaction on a weekend with all the automation that you could dream of, where T-bills are sold, you didn't take any counterparty risk, your accounting is done correctly, and you just close the transaction. That's what automation of T-bills allows you to do amongst other things.
Right. So, and you referred to a pocket. So this pocket or container houses both a regular demand deposit account or bank account and a custody account, and or not a custody account, a brokerage account. So it's surrounded by that's all enhanced by automation. So where is more of the value coming from? Is it the speed, or is it essentially eliminating the steps because they're fully automated?
It's the latter, I would say, because what it allows you to do with the construct of a pocket, which we've automated to the point where you can create as many as you want. If you through API or directly in our front end, you can create new pockets. So now you have a world where you can automatically create units of storage. Again, we call them pocket. Others may give them another name, where without thinking or doing anything about it, every cash you bring in there is automatically invested in T-bills. Any payment you make out immediately liquidates the T-bills. So the transition from a world where you had to manage your cash, take it from your operating account into another side of your treasury function, start thinking about which money market funds you will pick, how to distribute that at the group level. Now we're saying you can have that everywhere, even in your sub-entities, and you can create pockets for accounts receivable, accounts payable, big bonus payment, and M&A transaction. You're simplifying, you're allowing a reorganization of the finance world where everything by default now is naturally in T-bill. It's not a plus something you do on top at the very end. It's, if you have time, it's really by default, everything is in T-bill, and your operations can completely change. We're seeing clients reorganize even how they think about their accounting because they can create these pockets and don't have to. It's not a compromise. I'm opening a new operating account. Okay, now what's the risk of that bank? How much do I want to leave there? You don't ask that question. You just create a new account. You use it for the purpose you want. You close it, and you do another one.
Yeah, interesting. Yeah, so the episode, How T-bill Management Automation Became Possible. So I think we talked about the flow, the looking at equity trading, bringing that in, this world of brokerage and bank accounts combined. I'd love to hear, just some final thoughts. This technology and process changes allow for this legacy process to be transformed, and that opens up other ideas. Like, how would you summarize that for someone, the change in tech and processes in this world of T-bills and short-term cash?
I think what you're seeing with what we've done, but probably what others are working on, is a rethinking of the banking world, where the technology we're using is very modern. It's not necessarily, for example, we're not using blockchain to do this. There's no need for that to deliver the experience I just described. It's really in summary, it's a convergence of the advances in electronic trading combined with advances in digital banking. You need both. If you don't have the banking side, you've automated some T-bills, but you can't free up the liquidity and make payments against it. So it's this convergence of brokerage, banking, off-balance sheet activity, and very modern cloud-based ledgers that allow you to bring this type of product to the market.
I appreciate that, Stephan, but that also brought up another question. I know I'm not supposed to ask questions after I ask final thoughts, but you said you don't use blockchain, right? It's not on the chain, but it's you would probably still describe it, or I think I would still describe it as it's managing a digital asset. Now, T-bills can be managed digitally in a different way than before, so it's just maybe not on blockchain.
I like to remind people that cash is digital already today. Now, is it a token on a chain that you can count? No, but it's on a bank ledger. It's still an entry somewhere on some technology. Most of the cash is digital, even at the Fed. So it's really, in some sense, on our own ledger, we've tokenized the bills. We have that's another conversation. We have a very private architecture that's designed. That's where our name comes from. Again, Jiko means self in Japanese. The architecture is privacy preserving. Everything we do is to keep the customers safe. So we're making sure that their data is not commingled with mine and your monies are separated, etc. But at the core, T-bills on our ledgers are fully tokenized. It's a private ledger. It's a very modern one. Yes, it's not a public blockchain. We're not pushing and mining. We're compatible with it, and we're doing a lot with the industry, as you may have heard.
Yeah, excellent. Well, thank you so much. And for those looking to learn more about Jiko, you can see the link to Jiko in the show notes. Thank you, Stephan.
Thank you so much for having me. Have a great day.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.